Hello, I'm Donald Leggett, and welcome to the latest London South East CEO interview. I'm joined today by George Bennett, CEO at Rainbow Rare Earths, and they are the London-listed producer of rare earth metals. Rainbow Rare Earths are leading the drive towards production of high-quality and high-value rare earth oxides outside of China. ND and PR are added directly to make permanent magnets, whilst TB and DY allow permanent magnets to hold their magnetic strength at high temperatures. So that's why rare earth metals are important. Hello, George. How are you today?
Good morning. I'm very well, thank you, Donald.
You're joining us from around Johannesburg somewhere, are you, George?
Yes, I'm in my Rainbow office in Johannesburg, yes.
Fantastic. And you must be pretty pleased. That announcement last week was, I understand, pretty fundamental as far as you're concerned.
Yes, apart from the RNS when we announced the acquisition of the Phalaborwa project, this is probably the most significant announcement in Rainbow's life since then. And that is because we've been able to finalize an economic flow sheet to extract these rare earth minerals from the phosphogypsum stack at Phalaborwa. We always knew we could extract the rare earths from them because Sasol ran a pilot plant which produced 3 tons of a mixed rare earth carbonate. But that was from the live phosphogypsum stream. This is from the phosphogypsum stacks. And as I said, that we have been able to make sure that we could recover the rare earths in an economic manner. And that is that we've achieved plus 65% overall recovery, which is very high for any rare earth project around the world. Most rare earth projects have a circa overall recovery somewhere in the 40s to 50s, and we've been able to achieve a 65% overall recovery, which means we'll end up with a very economic flow sheet.
Okay, and talk me through the flow sheet. Why is it so fundamentally important to get your process, to get your chemical processes, to get your flow sheet absolutely spot on before you go anywhere near the next phases?
Well, this development has taken us a little bit longer than we originally hoped for various reasons I won't go into. But the key is that we spent a bit of extra time to optimize the flow sheet to make sure that when we publish this announcement that we've got a flow sheet that's optimized, not fully optimized, but it's optimized. It will work, and it will make sure that we've got a successful project. I've been in this game for a long time, having built 22 mines in my previous life, and I've seen clients who do not do enough development work and it bites them later on the project. I'm making sure we don't make the same mistake at Rainbow. This is critical because this is basically a chemical processing plant that we'll be building, and we had to make sure that our chemical processing was correct. If we look at Molycorp in 2015, when they had the Mountain Pass mine, they spent $1.6 billion on building a new process plant, which they didn't run a pilot plant on, and it put them into liquidation as that plant never worked. And likewise at Rainbow, we've now got a flow sheet. It's been proven at lab scale. Our next stage will be doing continuous laboratory testing of the process to further confirm that we're 100% happy with our flow sheet. And then at Phalaborwa itself, we're going to build a large-scale pilot plant to do continuous bulk piloting to further give our shareholders confidence that we've got a process that is 100% accurate and will produce the results that we know it will produce. So this is fundamental in any project, and especially since we've developed a process in conjunction with K-Tech, our technology partners in America, that we're going to patent. And like anything, we need to test this 150% before we're 100% happy with it.
So when do we get to that pilot plant stage? Is it possible to give me a timeline on that, George?
Well, we're going to be going into continuous lab scale piloting at K-Tech in Florida in the second half of this year. Well, we're in the second half. We'll be doing that in our next stage. And next year at Phalaborwa, we will have completed in the first half of next year, built our pilot plant at Phalaborwa, and then we'll be doing bulk piloting next year, and that's 2023 at Phalaborwa. Yeah, this is very, very significant that we are happy with it. We've got a flow sheet, as I said, and this flow sheet, we're going to patent what we've developed with K-Tech, which enables us to go and pursue other opportunities in a similar space to what we have at Phalaborwa.
Okay, let's take these one at a time. What will the key metrics be for production? In terms of future financial forecasts, a few months ago, you were talking to me about a 40%, 47% to 50% revenue uplift on where you'd been. Is that kind of still where you're at? Is it still 50% better than it had been initially?
Yes, the reason for that is that initially the project was looking at producing a mixture of carbonate, but in conjunction with KTech and their patented IP for the back end, we're going all the way to separated rare earth oxides, one of the few development projects in the world that are going all the way through to separated rare earth oxides. And that means
it gives you a significant commercial advantage, doesn't it, George?
Correct. That gives us a big uplift of about 40% in revenue that we will achieve for our product. And that's still the case. We will be producing a 99.9% purity separated rare earth oxide using the KTech process. And the KTech process uses far fewer steps than your traditional solvent extraction. And so basically at Phalaborwa, what we'll achieve is literally 9 steps using the KTech continuous ion chromatography process. You would have to have had about 1,800 mixer settlers in the traditional solvent extraction system. So that leads itself to far less capex and far less opex.
Okay, let's pick up on, you were mentioning the fact that you're able to do this for other people, and you and KTech are going to patent the process and apply it to other rare earth extraction opportunities. You RNS one of those opportunities. It was a South African chemicals group. Tell us a wee bit more about that, can you?
Sure, Donald. I'll just take one step back. I just want to highlight that each step of our process has each part of those processes have been commercially applied in other projects. It's the way we've configured them and put them together that we're able to put a patent over them. And likewise, all the equipment in the KTech IP, which is the back end, which is the continuous ion exchange and the continuous ion chromatography, all of those bits of equipment have been applied commercially in other industries. So there's nothing that's bespoke made for this project. All these bits of equipment have been made before, applied commercially in a number of projects around the world. So it's all been tried and tested from that point of view. It's just a configuration that we have to prove. And that is a very important piece to understand. And also the fact that all the reagents and the resin that we're using are all commercially available resins.
Obvious question, why do you think that's important? Is it because it keeps costs down?
Well, it's because it de-risks the project, is that there's nothing that has to be bespoke that hasn't been tried somewhere else. Every bit of equipment we're using in our flow sheet not only has been built and applied elsewhere, it's in commercial production. So that's a very key thing, which helps de-risk your project. And as I said, even something like in ion exchange columns, you use a thing called resins, which you load your pregnant leach solution and you strip your rare earths off that. Those resins, there are 3 manufacturers of those resins. They're commercially available. So there's some new processes have bespoke resins specifically made. Well, and that's always very risky. At our Phalaborwa project, we've got none of that risk in terms of the reagents, as I said, are very commercially available off the shelf, and all the equipment has been made commercially and it is available off the shelf, as I said. Now, just to come back to your question about other opportunities.
Yes. What are the opportunities? Now that you patent it, well, hopefully you patent it, what are the opportunities commercially once it's patented?
So, as I mentioned, we've signed a MOU with a significant chemical producer in South Africa last month, and that enables us to go and do the tests to, we know the rare earths in their phosphoric acid solution. So the phosphoric acid they are producing is using the same feedstock that they use at Phalaborwa. And that's when I realized that the rare earths would be in their solution as well. And under an NDA last year, we took samples of their solution, and we were able to prove that it's grading at about 0.81% TREO, which is about double the grade of Phalaborwa. And our next step is then to do further testing to confirm that that's an indicative grade of the whole solution in their phosphoric acid plant. And then we'll be looking to do the separation of the rare earths out of that phosphoric acid solution. This will be also a very low capex and opex type project, because the phosphoric acid is already in solution. It's already cracked in chemical form, and we'll be applying our IP with KTech to both extract the rare earths initially at the front end, and then at the back end, we will be able to produce separated rare earth oxides. So it's a very exciting opportunity, and it's opened up other opportunities that we are looking at around the world.
So why is that rate of 0.81%? Why is that double Phalaborwa?
It would appear that because it's in solution, we saw this with the Sasol test that they ran some 10 odd years ago. The grade of the rare earths in the solution is higher than the grade that you find eventually on the stacks. And, you know, I can't explain that from a chemical point of view, but that's just a fact.
Oh, no, that's all very interesting. And the commercial opportunities beyond the MOU that's already been signed?
Well, obviously, it will be to jointly build a process plant at their facility to extract the rare earths and then sell these rare earths like we're going to be doing at Phalaborwa.
But with apologies, do you see it, will there be other projects?
Well, we are looking at other projects, yes, and similar opportunities.
Anything you can tell me about that? Presumably not.
Not at the moment, but
okay.
we are
commercially sensitive. There's always a good answer.
Yeah.
Okay. Feasibility. Sorry,
just to also add is that now that we know what our recovery is going to be overall at the Phalaborwa process plant, just for your viewers, and they can run their own numbers, but we're going to be producing somewhere between 1,800 and 2,000 tons per annum or more of neodymium, praseodymium separated rare earth oxides, about 80 tons of dysprosium, and about 16 tons of terbium. Now, the prices for these separated oxides are quite significant. So your neodymium, praseodymium oxide is running at about $140,000 a ton. Dysprosium somewhere around $450,000 a ton. And terbium, even though it's only 16 tons, you sell that for about $4 to $4.5 million a ton. So it's still significant revenue from those two byproducts of the dysprosium and the terbium.
And do you expect those prices? Do you expect those prices to maintain?
Look, the prices were a lot higher earlier this year, and they've come back quite significantly. I mean, neodymium, praseodymium got up to about $185,000 a ton, so it's back at 140. We're very comfortable, and in fact, we'd be comfortable to still pull back another 20%, no problem. We'll still have a very, very significantly profitable project at Phalaborwa. You know, like all commodity markets, prices don't go up in a straight line. You experience pullbacks, and you also don't want these prices to become so ridiculous that the motor manufacturers and the wind turbine manufacturers are forced to look for alternatives, alternative technologies. Now, at the moment, there's no alternative technology on the horizon. It'll just take too long to develop. So, you know, at these kind of prices or even lower prices, we'll be very happy that we will survive lower prices in our project.
And those metrics all feed into your feasibility study, which comes next, presumably.
Correct. Our feasibility study is our next target, and we will be producing that feasibility study by the end of this quarter.
What do you expect to put into the feasibility study, and what sort of numbers will you be producing, do you think?
Well, the feasibility study will confirm our expected revenue at current prices, our OPEX, as well as our capital costs, and basically the IRR and NAV of the project. So I believe it'll be a big inflection point for our share price, because then the market will really be able to value Rainbow. It's obviously done independently by an independent engineer. And as I said, this will be an inflection price for the share price, I believe. And we'll go straight from that feasibility study into our pre-fees, and next year we'll be starting our bankable feasibility study.
So give us a timeline for those different releases.
Well, as I said, by the end of this quarter, we'll have our PEA initial technical study out. We'll go straight into a pre-fees, which will complete end of this year, January, February at the latest, 2023. And by the end of 2023, we'll have completed our bankable feasibility study.
Okay, thank you very much indeed. Do we have time for a quick update on Burundi? We never seem to talk about Burundi so much these days.
No, Burundi is still a key project for Rainbow. It's still a very high-grade producing rare earth asset in Africa, the only producing mine. As you know, we were suspended a year ago to the month of June from operating while we had to renegotiate the mining convention. I met with the government for a week 2 months ago. We gave them a proposal to restart exports and restart mining, and we're waiting for the government to respond now. We are seeing some movement, as I've said, and hopefully we'll get positive news shortly, but that's all I can say.
Things happen fairly slowly in that part of the world, I presume.
Correct.
Okay, what can investors, final question, you'll be delighted to hear. What can investors expect in terms of news flow over the next few months? What comes next?
Well, as I said, we've finalized our drilling on our stacks at Phalaborwa, which is just to improve the confidence in the overall grade. We know the grade's homogeneous, but we actually take it from an inferred to measured and M&R resource. Then we will have our feasibility study, and then we will have our pre-feasibility study and the announcement of our continuous piloting at KTEX laboratories in Florida. And there might also be some new opportunities.
Plenty to look forward to, George. I love it. Okay, thank you very much indeed for speaking to us today. That was absolutely fascinating. What an excellent operational update, full of information. Thanks a lot. And if you're a Rainbow investor, do remember to tell the RBW board if you found this interview useful and all those lovely stats helpful. Spread the word. Feel free to follow us on Twitter. That's @London Southeast for our good selves. And if you like this interview, then Google London Southeast YouTube channel. You'll find a back catalogue of all these fantastic interviews, full of financial information about the companies that you may potentially follow. Thanks for watching, and as I say in South Africa, please go well.